Have you ever sold a stock for a profit only to see it years later take off, wishing that you held? Knowing when to sell a stock can be the hardest thing in the world. There's a lot of problems that come with selling a stock, including high tax bills, missing out on future gains, and taking a loss too early. So in this video, I'm going to give you the exact place to sell a stock so you can avoid all these problems.
Is it Brian? Yes.
Hi, I'm Giannino. I teach you how to make money, grow money, and invest money, so please like this video and subscribe to the channel. I would greatly appreciate it. As stated, I will tell you the 3 best places to sell a stock, and the only way I learned this is by making tons of mistakes in my past, missing out on future gains, taking losses too early, paying high tax bills. I've done everything I'm telling you not to do. That is exactly why I'm the perfect person to listen to. I've been trading the stock market professionally for 4 years, and I made a huge mistake selling a stock too soon. I think we all can relate to this, but let me tell you my story. So I was in Europe and I see everyone on their phones looking at Snapchat. I go back to America, everybody's on their phones looking at Snapchat, and I think to myself, wouldn't Snapchat be a great long-term investment? And that's a great way to look at a stock. It's a great way to do research. So I was all excited, as you can imagine. I went onto my computer and I bought Snapchat that day, about $6,000 worth in my retirement account, so I could hold this long term. And here's where the problem begins. Snapchat was at $9 when I bought it, and it sank month after month after month after month. It must have been 6 months of the stock dropping, and finally at the bottom there was all this news of the CEOs selling stock. CEOs were fighting with people within the company, people were being laid off, people were being fired. It was a terrible time for Snapchat, and I did the worst thing you can imagine. I sold the stock at exactly the bottom. I got sucked into all the negativity and I had a massive loss on my account of 30%. Flash forward to today, Snapchat went from $6 at the bottom from where I sold it. Now it's at about $17, almost 200% on the stock. So yeah, my research was correct. Buying the stock was at a perfect price. The only thing that went wrong is I sold it at the wrong time. So like I said, I'm only here in this video to tell you exactly where to sell a stock and avoid all the mistakes I've made in my past. So enough with my sob stories. Let me tell you the 3 best places to exactly sell a stock. Place number 1 to exactly sell a stock is to sell it when you said you were going to sell it. This may be a little confusing, but let me show you how. Following this could have saved me that 30% loss, and I would have had 100% gain in my account just from that Snapchat example. So I said I was going to sell Snapchat in my retirement way 30-40 years from now. What I did wrong is when the stock was selling, I gave into the negativity and I did not sell the stock when I said I was going to. I sold it 6 months later instead of 30 years later. That's where the problem was for me. That's where the problem is for everybody. They feel like they have to do stuff every day in the stock market, which is completely wrong. When you buy a stock, the only thing you really should be doing is holding and pretty much not thinking about it. Let me give you another scenario for all my traders out there. Let's say you have a setup on a stock trade and you expect to buy a stock here and you expect to sell it here for X amount of profit. Let's say everything goes well, you bought it exactly where you said you're going to, and it's right where the profit zone is, meaning you executed it perfectly, you made the amount of money you were expecting to make. Now, when you're at this point, most traders think, hey, if I let it run even further, I'm gonna make even more money. You said you were gonna sell it there and you're not. That's a huge mistake for traders. Take profit when you said you're going to take profit, and sell a stock when you said you were going to sell a stock. I don't think you understand how hard it is to execute perfectly in the stock market, meaning planning, buying, and selling and making profit. It's very hard. So when that happens, don't be a pig, because pigs get slaughtered all the time and they're made into baconators. Another example for long-term investors or swing traders is IPOs usually run for insane percentages. So some people try to buy IPOs so they can get 1 to 200%. Let's say your plan is to swing trade IPOs all the time. All you want to do is buy an IPO in 1 to 2 years, sell for 100-200% return. And if that actually happens and you don't sell for 100-200% return, you're going to get burned because you did not listen to when you said you were going to sell. But aside from all those examples, real wealth is made in the stock market by holding for long periods of time, so you really shouldn't think about day trading or swing trading, because growing your money passively in the stock market requires patience and decades, as well as consistency to what you said you're going to do and how much you're going to put into the market. Now let's move on to the second best place to exactly sell a stock. And this is when the moat of the stock is gone. This is a little morbid and hard for people to understand, but when a stock is doing well and you're making profit and you've been holding it for decades, if the core business of the company is at risk and they're about to lose revenues and customers for the eternity of the company, the moat is slowly deteriorating, and that's a good time to sell the stock. If you're not familiar what a moat is, Warren Buffett invests in companies that have a strong moat. And I think he would define a company moat as a way to consistently bring in revenue for the company and grow it over years and decades, as well as keep out competition. So an example of a company with a great moat is Coca-Cola, because they have a formula for an amazing soda and they've been selling that soda for decades. People love Coca-Cola and they need it all the time, even in recessions. Let me give you an example of another moat and what it looks like. So let's look at a company that's making tennis balls, and they have the bounciest tennis ball on the market, and they patented their technology. They're also using tennis balls at the biggest competitions all over the world, and revenue is consistently growing and their customer base is consistently growing too. So this company is a strong moat right now for all those reasons. But now let's look at how this moat can deteriorate, and then that would be a good time for you to sell this stock. And a deteriorating moat looks like patents running out of time and not being able to be renewed. So these bouncy tennis balls that were protected by the patents, when the patents run out, they really have no protection on the technology anymore. Now let's say more people are making tennis balls in the market that are more bouncy than these tennis balls. So that competitive advantage of having the bounciest tennis ball is now gone, because more people are making tennis balls that actually bounce higher. Let's say revenue is either flatlining or deteriorating and declining. So from this example, I think you can understand what a moat is and how it can disappear from a company, and then the company will just continually sell off because of these factors. This happens all the time, and this is the one downfall of picking stocks, because you have to do the research to know that it's a strong company, and not only that, you have to follow the company every time they release financial reports, because if anything changes in that company that could affect the moat, you want to know right away, because that's when you want to sell the stock. Some fundamental factors you can look at to decide if the company is strong or weak is you can look at the dividends. If the dividends are consistently being raised, that's a good thing, but if they're cutting dividends, it shows the company is really struggling. The next thing you want to look at is revenue, and I talked about this a couple times. We want to see that climbing, always getting higher and higher. And then the other thing you can look at is the gross margins. This is the protection of the company from competition. If gross margins are above 30%, that is seen as a company with low competition. When we see gross margins in the 10-15% range, competition is starting to come in and eat away the margins on that company. Another factor could be dilution. This is where a stock adds more shares to the company, meaning you own less of the company as they keep adding more shares. This is bad long term for you, the investor. You don't want to stay with a company that is consistently diluting you. And the next thing you want to look for is innovations. If innovations are not coming into the company and the company is not making better and better products to compete, that is also a good time to sell the company. You can also look at insider selling. So if the CEO, the CFO, the big guys in the company are consistently selling shares, that's also a good time to get out, because if they don't believe in the company, why should you? Another factor you can look at is if the company is being taken out of indexes. So the index is where we have a bunch of strong companies that represent America. And if companies are being added to the index and added to that pool of strong companies, it's a really good sign. But when they take out that company from the pool, It shows that the company is weak and they don't want it representing all of America. And there's plenty more reasons why you should look to sell a stock along with their fundamental core aspects. And the third reason why you should look to sell a stock is maybe technical analysis is giving you clues that it is weak or there's some sell signals. I really don't talk about technical analysis too much right now, but I'm just going to give you a general overview of how traders can look when to sell a stock, even long-term traders. And if you don't know what technical analysis is, all it is looking at charts, looking at patterns, and using indicators to gauge when stocks should be sold and when stocks are getting weak with all the buying or selling. Just for reference, I pride myself as a technical analysis trader. I run a premium group where we have high percentage trades, and I'm really happy to do that because we've had some great results in the past. If you want to try that out for 7 days for free, click the link below that. But let me go into the examples of what technical analysis traders look for when they're looking to sell or buy a stock. One example is the RSI. It's probably the most common indicator you can put on your chart. And the RSI just gives you buy and sell signals pretty easy, but it's not as simple as it sounds. Most of these signals can be false signals, meaning when it tells you to buy the stock drops even more. And when it tells you to sell a stock, the stock keeps going higher for weeks and months. But for the most part, if you can use the RSI indicator correctly and it tells you to sell or buy, it's just a good place to take profit or most likely get out of that trade. Or even long-term investment, because it would have told you to buy the market in the recession of 2008 at the very exact bottom. I'm not kidding you. That's the power of indicators. Another example of a technical analysis sell signal would be divergence, and this is where you have an indicator like the RSI or my personal indicator, and when the stock keeps going higher and higher and higher, but the indicator does not make higher values, the basis of this analysis is that there's weakness in the stock with the buyers, because if it was going higher and it was strong, the indicator would have higher values along with the higher pumps in the stock. So divergence is a great place to sell. Another great place to sell is a wedge resistance. This is definitely fun because you can draw this on your chart and stocks really trade in patterns that you wouldn't expect. So a wedge is like a triangle, as you can see from this chart, but every time the market goes higher, it doesn't go as high as the last jump. So think of a bouncy ball. When it's bouncing, 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 every bounce is smaller and smaller and smaller. And when this happens, when the stock market is making new highs, that's also a great sign we're seeing weakness, and it's a good place to sell. The last place to sell could be a MA cross, which is a moving average crossover. This is where we have a fast moving average, maybe the 50 daily moving average, and we have the 200 daily moving average. When those cross after we have a huge bullish run, that is called a death cross, and that's when most people, most technical traders will look to short the market and sell. So those are just 4 quick examples of what technical analysis can look like and how it can tell you to sell at certain times in the market. I know I just went through technical analysis really quickly, but I made an in-depth, huge trading course that you can check out with the link in the bio. I think you'll really love that. But all this video was is teaching you when to sell a stock, and the basis was you should sell when you said you were going to sell. You'd be surprised how many people don't do that. And the second way to sell is when the company moat or the reason you bought the company is deteriorating and the company is not as strong as it once was. And lastly, we look towards technical analysis to tell us when to sell a stock. But let's not get it twisted. Selling a stock is hard, but buying a stock can be even harder. That's why I'm going to give you a video to the right of me on when exactly to buy a stock. Make sure you check that out. Wouldn't it be nice to just buy a stock and see it make you money right away? In this video, I'm going to tell you when the best time to buy a stock is